Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my very special guest, all the way from Michigan, here on remote.
Yes.
So we are not in the studio office. We are on location at the Omni Champions Gate in Davenport, Florida, just south of Orlando.
I did not know we were in Davenport.
We are in Davenport at the Lenders One Conference. CMB, COO, Brian Vieaux with FinLocker.
Thanks
Brian,
for having me, man.
Thank you. Thank you. We've been trying to do this for like 9 months.
Yeah, you wouldn't let me do it remote.
I don't do it remote. No, I have very high standards. Yes, this audience has very high standards. And it's about sound quality.
Okay.
True story. I am a podcast connoisseur, right? I'm a huge Rogan person,
yeah.
right? I'll tune into podcasts about Dolly Parton. I'm actually listening to one right now. I like to watch them. I like to see what Dave Savage does with Mortgage Coach, and he does a fantastic job. And he's usually on Facebook doing Facebook Live.
Yep.
But I remember tuning into even Rogan, right? He sets the bar.
Yep.
And when Rogan would have someone calling in versus in studio, I couldn't pay attention the same way. So I just decided, regardless of audience size, whether we were 500, 5,000, or 50,000, I really wanted to be adamant that if we were going to do a podcast, we're going to do it this way.
Give you credit.
Yeah, so we had to wait for a time for you to be in Orlando. You hit me up about 6 weeks ago. You're like, hey, Lenders One's going to be in Orlando. And then I pulled it up on the map. I'm like, well, you're not technically in Orlando, Brian. You're in Davenport. But I will drive the 40 minutes that it took us to get here. Actually, it only took us like 25 minutes.
Right.
Thank God we didn't have the stereotypical I-4 Orlando traffic to get down here. Because I want to pick your brain. Obviously, you're a CMB,
Yep.
right? People who tune in, they understand that I went through the same journey just 2 years ago. You did yours like 15 years ago? 16?
2005 is when
Wow.
I finished it. Started it in 03.
Okay.
Yeah.
Yep. Well, I started mine in 18. I finished it in 2020.
Yep.
I did the whole AMP first, and then I went on to the CMB.
Right.
So it wasn't that I was like procrastinating. It just took me that
I
long
don't even
to.
think we didn't have AMP back in 05, I don't think.
You know what? It allowed me to do school of mortgage banking 1, 2, and 3. It knocked off my education credits that I needed in order to submit my application. But you're a fellow CMB. You're a fellow mortgage banker, but you don't work loans anymore.
I don't.
You don't. So here's what I want to talk about. I want to talk about FinLocker. I want to talk about the company that you are on the executive team, what FinLocker does. More importantly, I want to pick your brain because you're a tech guy.
Which is crazy. I don't think I am.
Yeah. Yeah. When you went to Michigan State back all those years ago, tech was not in the forefront of your mind, right?
Not at all.
Yeah. Was it on whether or not Nick Saban's going to stay as
That
your
was
head coach?
That was my main worry in life.
Is
Can we keep
Saban?
Nick? Can we keep
Imagine if
Saint Nick.
Yeah. Imagine if Saban stayed.
Oh my God.
At Michigan
Yeah.
State. Yeah. Yeah. It would put your football program would put your basketball program to shame.
Yeah.
Unfortunately. Or fortunately, if you're a Bama fan, he ended up finding his way to
That's right.
Tuscaloosa, Alabama, and well, now all the rest is history.
Yeah.
No, but when you were at Michigan State, you weren't considering a career in technology, let alone financial technology.
I wasn't even considering a career in mortgage, honestly.
Well, let's talk about that. So, how did you find your way in the mortgage industry? What drug you in?
So my father-in-law, and he was not in the business either.
Okay.
So my father-in-law was an entrepreneur, owned a car dealership, and so
Did you ever hang out with Kid Rock's dad?
I don't think so.
Because Kid Rock's dad also owned
way.
car dealerships in Detroit.
I did not
Yep.
know that.
All right, I digress. I
So
apologize.
my father-in-law had a couple dealerships in Detroit. Entrepreneur, self-employed, which means his kids were on his self-employed insurance.
Okay.
We got married. My wife and I got married, and we had this conversation about 2 weeks after the wedding. We got back from the honeymoon, and I was working for a builder at the time, cash money under the table, just graduated college. And he's like, so we need to do something here. I'm like, oh yeah, what do you want to do? He's like, you need to get Amy on your benefits. I'm like, what are benefits? I don't even know what benefits are. So he taught me a quick lesson on what benefits are in insurance and how I had about 30 days to get a job that had benefits so that he could effectively take one off of his plan. So
Okay.
that was my impetus to go find a job, a real job. And I did the old school way. There was no LinkedIn. So I looked at a map and said, okay, 20-mile radius from where we're going to live. Let's just go drive around and paste resumes, hand out resumes. And I got a call back from this company called Fireman's Fund Insurance.
Okay. I've heard of them.
Yeah,
They used
interesting.
to advertise nationally.
That's right.
Okay.
So, and I'd driven by their office. They had a big old red helmet on the building. I'm like, oh, that'd be a cool place to work. So I go in there, drop off the resume. I get a call back 2 days later, go in and do an interview. No insurance. It's a mortgage company. I'm like, what's a mortgage? I didn't know there was a T in mortgage.
Yeah.
Or G, I guess it is.
It's a
Whatever
T.
it is. There's a T and a G.
It's two G's and one T. Yes. And people who do not know this industry will screw that up.
Oh, yeah. So I get the call back, go in for a second interview. And during the interview, they ask if I can start immediately. I'm like, yeah, sure. I can come in Monday. No. They're like, no, this afternoon, can you start? And so I got hired into the mortgage business. And my first job, they handed me a stack of papers, little messages. And you had a name, first name, last name, a phone number, and a number with a percentage on it. And my job was to sort them highest to lowest based on that percentage, and then start calling and say, if I could get you 10.5, do you want to refinance? That was my script.
That's $10,500 out, cash out refi, right?
Just 10.5%.
Oh,
yeah,
wow.
Bam. And
wow.
Those were streamlines back
And to
then.
think that loan officers are complaining about, whether or not they're going to offer 3 1/4 or 2 3/4. You were, okay,
10.5.
10.5?
In today's parlance, it'd be paying back like, 300 basis points.
So no formal training.
No.
Here's a stack of basically contacts.
Yeah,
Sort them from highest rate to
this
lowest
was
rate.
our CRM.
Yes. And dial for dollars.
Yeah. So if they said yes, I put it over here, and then the loan officer would come in and grab it and sell the deal. And if I said no, I threw it in the trash, and that was the end of that lead.
Wow.
So that was it.
Looking back on that time frame, like what is it that you're most grateful for based on that experience? Because how long did you stay with Fireman's?
So I started in November of 91, and Fireman's became Source One Mortgage,
Okay.
which was then sold to Citibank
Okay.
in 1999. And I was all the way through the sale. I was an executive by the time we sold the company, and then was part of Citi for another 5 years following. So that was first job in, and I would have been a lifer if we didn't sell the company, frankly, probably.
Wow.
Yeah.
So back in the early days, when you look back now, knowing where you are with FinLocker, obviously you started at the bottom.
Yep.
Right. I think it's Drake sings about started from the bottom. Now I'm here.
Right.
Right. You started there dialing.
Yep.
Those are early days. What were some of the greatest lessons you learned or experiences that you were able to encounter that helped you become an executive? And then what type of executive were you?
Yeah. So
I'm legitimately curious.
Yeah.
Ultimately, for anyone who's tuned in, by the way, where I'm going to try to go with Brian's, I want to pick Brian's brain about the future of the mortgage industry as it pertains to technology. How much has he seen technology change the current landscape?
Yep.
And how much greater is it going to change? Have we seen all the changes, or are we just now beginning to touch on the tip of the iceberg? And if so, what does that look like? But before I do, I'm curious. I want to know you, Brian, better. But I think it also helps when you speak. You're going to speak from a place that a lot of our listeners are going to understand, because I want them to understand that you're not a tech guy first.
Right.
You're a mortgage guy first. Like I'm starting like 22 years old. You know what it's like to pick up the phone and smile and dial. But at the same time, one of the underlying themes we have here on the podcast is everything you should have learned in school but didn't because it wasn't taught.
Yeah.
So if I have someone of your caliber and your experience, I would love nothing more to pick your brain, because there's going to be a nugget or two that we can pull out of there and give to the audience as takeaways.
Perfect.
So I am
Love
going somewhere with all of this, I promise.
It's cool.
Everyone who's tuned in, whether you're tuned in on YouTube, at the Loan Officer Podcast, Spotify, Apple, or anywhere where you find podcasts, we are the Loan Officer Podcast. We're also on every social media platform. That's TikTok, that's Instagram, that's Facebook, that's even LinkedIn. We have our own LinkedIn page.
I found you on LinkedIn.
Yes, we connected on LinkedIn at the Loan Officer Podcast. I'm Dustin Owen on LinkedIn. He's Brian Vieaux, but do not try to spell it like, you view a scenery. View is spelled
Vieaux.
Could we throw a couple more vowels in there
We
just
could.
in case? There's no Y.
Nope, we don't have a Y.
We don't have a Y, but every other vowel I
need
do
to know.
believe. Oh, you need to
We
know.
need to know.
All right. So we're missing yo.
Yo.
It's Brian Vieaux without the yo.
That's right.
All right. Perfect. And he's on LinkedIn because that's how Brian and I originally connected in order to get him here. And it was probably while I was going through my CMB journey myself is actually how it all transpired. All right, I got all of that taken care of. John Coleman now will not berate me as we drive back to the office. I got the business side taken care of. People know how to get a hold of you. They know they need to check out FinLocker. We're going to talk about FinLocker a lot because FinLocker is on the forefront of technology. But before we do, back to my original question. When you go back those 30-some years ago, what are some things that you're grateful that you got to experience and got to learn early on in your career?
So I'll keep it short so we can get into the meat, because I think the thing that I still lean on today, almost 30 years later, is relationships matter. And it started, I was 23 years old, started in the business, and the rates were kind of fallen from a 15% down into the tens, and then eventually into the single digits. And so very early on when I joined that company, there was 10 of us, small little team. And in 6 months time, there was 60 of us. And so, some of us who were lucky to be there early became managers because we were there longer and we just knew where stuff was.
Yeah. Manager by title.
Exactly.
Yes.
Yeah. So I had to quickly learn at 24 years old how to not only manage my own day myself, but other people.
Wow.
And so
okay.
I quickly found examples around the company of people who I looked up to as managers, not because they were the traditional business school manager, but people who treated people fair and engaged people and took an interest in their development. And so I tried to be that kind of a young manager and build relationships with the team and just be there and coach and mentor. And sometimes you have to have the difficult decisions. That's part of being in that space. But it served me well as a young professional to have mentors and people I could look to as an example, and then people that I could go to and actually bounce ideas off of and get feedback from. So
I love that. I mean, it's whether it's 1991, 2001, 2011, 2021.
Right.
It's people matter.
People matter.
It's people over profits. It's relationships. I mean, I have a 13-year-old and a 17-year-old, and that's the one thing I try to stress to them. Even my 17-year-old, who is mentally, he's very engineer tracked.
Yep.
And I'm like, hey, but the most successful engineers, not only do they know the science and the math, but they also know how to work with other people, how to lead other people, how to train and teach other people. Those that can do the technical, but also present. I tell him his name is Jackson. Jackson, they make 3 times as much. So if you're money motivated, but you're tracked there, and you're telling me, yeah, that's kind of the same thing that I learned early on in my career back in the early 90s was, hey, I had to focus on the people first. And then obviously, if you didn't know what to do, you found people to emulate. You found people to, hey, I want to follow in your footsteps.
Right.
Okay, that's fantastic advice.
Yeah.
Now let's fast forward.
Here we are.
To 2021.
Yeah, crazy.
Right? Like, you're with FinLocker. How'd you get to FinLocker? Because you've been with FinLocker for
a little over 2 years.
A little over 2 years now.
Yep.
You were a Flagstar Bank for 7 years prior to that, I believe.
Yeah, you're right.
How'd you get to FinLocker? What does FinLocker do? And then speak to anyone who's in this industry and you're planning on being in the mortgage industry for another 5+ years. Right. Look, if you made a pile of money last year and you're at a point in your life where you're looking at the calendar and you're looking at your watch and you're like, I have 2, maybe 3 years. Guess what? The show's not for you. Tune off, tune out.
Keep doing what you're doing.
Keep on doing what you're doing. You're good. Okay. But if you're looking at your timeline and your career path and you have 5+ years that you need to continue to make a living in a career that you love, this episode is for you. And the meat and potatoes that we're going to jump into, this is what you want to listen to. So back on my original question, how'd you end up at FinLocker? What does FinLocker do? And then more importantly, on a broad scope, what's the future of our industry as it pertains to technology?
Got it. So how did I get here? You mentioned it, 7 years at Flagstar. 2 of the 3 co-founders of FinLocker are 2 good friends of mine. We met back in 1999 when they founded a little business called Lenders One.
Oh, wow. Okay. We're at the Lenders One conference.
Lenders One conference.
Man, that's very coincidental. Okay.
So I've known these guys, from their early days. We're the same age. We kind of grew up in the business together, so to speak. And they sold their business to Altisource.
Okay.
Finished kind of their requirements, if you will, with Altisource, and did very well when they sold the company. And they created a fund in St. Louis, a tech fund. And out of that tech fund, several companies kind of emerged. One of them was this thing called FinLocker.
Okay.
About 7 years ago. And what they were doing at the time, which is not what we do today, you and I were kind of talking about that earlier. What they did at the time is they were trying to help streamline the middle of the loan manufacturing process. So for our audience, you think of the process of gathering bank statements today from consumers. You do it typically by you get your 2 months bank statements, and then you get ticked off when you look at the second set and there's no blank page 7 of 7.
I said all pages. What part of all do you not understand? Yes.
And I love the whole meme deal that's created around that. It's pretty cool. So they were seeking to kind of automate that process by digitizing or using transactional data, direct source transactional data from a bank account in lieu of bank statements.
So this was like D1C before D1C.
This is exactly that.
Okay.
And so probably a little early, probably a little too soon, but a great concept. And the the process that they went through for a consumer to link that bank account, in a sense, created this financial locker. Thus the term FinLocker.
Yes.
So this box was created, and in that box was one financial account, a bank account. And while the industry wasn't ready to embrace this, and consumers probably still weren't ready to embrace this 7 years ago, of the users that used the product, there was feedback like, this would be cool because now this locker kind of existed for the consumer, and they could see stuff that was happening in it.
Like transactional history, savings growing, income growing,
exactly,
debts going down.
So consumer feedback led to, it'd be cool if I could, in addition to seeing that, if I could maybe track my credit. And then it was the next thing and the next thing and the next thing. And so the company pivoted a couple times, and the first pivot went from this single point transaction function that they were solving for to more of a consumer facing app.
Yeah,
right?
so you went from almost B2B to B2C. I mean, in a way, but by way of, you're not going to go to the consumer directly. You need to go to where consumers go to apply for mortgages.
Right. Yeah.
But your interface was going to be something consumers would want to interact with.
Yep.
Where the original thought was, no, this is going to be something that's going to help mortgage companies process loans quicker, more efficient, and hopefully more economical.
That's right. And that you nailed it. That was the thesis initially.
Which, I mean, I think most financial technology companies, that's what they're trying to solve for.
Exactly.
How do we take a cumbersome process that is lengthy and expensive?
Yep.
And how do we cut a week off? And how do we cut $600 out so that lenders can either stay afloat and stay profitable,
yep,
or hopefully lenders can stay afloat, stay profitable, but also pass some of that savings along to the consumer in ways of cheaper transaction costs or cheaper interest rates?
That's exactly right.
Okay.
Yep. So I was interested from day one because my friends were part of the founding group. And so I brought them in a couple times. We looked at it, the product. It just didn't work for Flagstar at the time. And
kudos to Flagstar, by the way, because Flagstar does have, for any techie people out there, they have a technology incubator.
Yes.
Like you and I were talking offline, a friend of mine, Brian Young, who I've had on the show, started this company, Home Lending Pal, and he's a part of that same tech incubator for people who are trying to come in and add value to the mortgage space. FinLocker did or did not do the incubator with Flagstar?
We did not.
You did not, okay.
Yeah, we were probably just a little bit too mature, if you will, although we could debate that. But, but we were not part of that, although I still leaned on them for different help along the way.
But your buddies eventually came to you and said, hey, Brian, we know you love Flagstar. We know you love your job, but we're at a point now we need a leader. We need someone like you on board.
It was almost the other way around.
Okay.
I'm at this point in my life. I'm 53. My kids, pretty much graduated college and they're doing their things. And I'm like, I'm at this point in my life where if I'm going to ever make a bet on myself, I need to do it now.
Yeah.
And so now the question is, am I going to make a bet solely on myself and go start something, or is there something out there that's interesting that I can be a part of that I can help grow and improve on? And it was FinLocker. That even from day one, I knew there was something there, and I just didn't quite see it. And then as their roadmap started to crystallize, in my mind, it came clear that this is the platform I want to be part of. So I invested in the company before I joined it.
Okay.
And then left, some would say the most lucrative 24 months of mortgage origination history. My wife reminds me of that.
when you were at Flagstar, so you were still tied to origination. So you got in as an originator in 91, and although you elevated yourself into executive management positions, you still were tied to production.
I ran a big production business for Flagstar.
Direct to consumer, or were you doing
third party?
Third party, okay.
Which was super cool because I got to see every type of lender and organization and model out there, and I also got to think about it, and I lean on this all the time in my current role. I got to think about how do all these different companies use technology, because there's no cookie cutter approach. Everyone's doing it a little bit differently, which is cool.
Yeah, and for those that don't know, TPO or third party, the way that I would explain it, and please come back behind me and correct me where I'm wrong, because I very often find myself on the wrong side of being right. And I would say TPO would be, is it wholesale?
It is wholesale.
Yep. So I'm a mortgage broker. I own Owen Orlando Financial. It's a mortgage brokerage. I need a place to send my clients loans.
Yep.
I go and I apply and I get signed up with Flagstar, at which point I take John Coleman's loan application, I collect his docs, and I submit them to Flagstar. That's called a TPO or a third party originator, because I'm the third party. the owner and the broker of Owen Orlando Financial, but Flagstar is going to be offering the funding.
That's right.
TPO could also be if I had some kind of a correspondent channel.
Absolutely.
Right? So I'm Waterstone Mortgage.
There you
I'm
go.
much bigger than Orlando Owen Financial.
Yeah.
But and Flagstar is going to say, hey, Dustin, you and Waterstone, you can totally cool. You can underwrite, you can fund, and then you'll just sell us the loans afterwards.
That's right.
Right. So that would also be an example of what TPO would be.
That's right.
All right, cool. That's for our audience, for people who are tuning in who maybe just don't know that terminology the way that you and I do with our fancy CMB titles, you know?
Pledge pins.
With our pledge pins. Yeah, you're wearing yours today. I lost my original. True story. I reached out to Amber Lawrence over at the Mortgage Bankers Association in DC. Shout out to Amber.
Right on.
And Amber told me I have to wait until MBA National in San Diego in October, and she'll bring me 5 new ones.
I used to go to every conference I'd go to. I would go into the MBA booth and like the little mint jar. I'd grab a handful of my pins, put them because I'd lose them all the time.
Yes. Well, yeah. I'm at a point now. I'm going to put a pen on every jacket I
There you
own, and that way I don't have to worry about
Yeah.
it. Except for when I take it to the dry cleaner, then I'm going to end up losing it. But hey, that's a whole other story. Okay, so let's talk about this.
Yeah.
Let's talk about. So you're all in.
I'm all
right.
in.
You're all in. You walked away from 2 of the greatest years.
Yep.
You invested a chunk of change into this company. Then you joined them.
Yeah.
Right. Do you want
Double down, triple
yeah,
down.
Yeah, exactly. You want to talk about having a vested interest.
Right.
What do you see with your decades of experience on the origination side?
Yeah.
You willingly made this change. What is technology doing right now in our space? But more importantly, what's it going to do 3, 5, 7, 12 years down the line?
Yeah. So what I saw, and what I saw in my role at Flagstar, visiting lenders across the country,
Small, large, everywhere
All
in
sizes.
the middle. Yep.
the consistent common theme was every one of them has a desire to get to the customer earlier. Whatever define earlier,
Yes.
however you want to define
First,
it. Could
it's a race.
Could be
It's-
1 minute before a transaction, or it could be 1 year before a transaction. But they want to get there earlier.
Yep.
And very few are really doing it. Most originators, and this would be something that I'd share with your audience who again is thinking of this career 10 years out, do not think of this as a transactional business. This is a relationship business at its core. I mean, I talked about
Yes.
that right from the beginning.
Yes.
That was my most important leadership attribute that I learned is relationship. It's the same in the mortgage origination business. And so if you can get out of the transaction mindset, which means the relationship with my borrower starts at a loan application, no. If that's where your relationship starts, you're too late. You are going to get beat. Rocket's going to beat you. Better's going to beat you. Loan Depot's going to beat you. And there's a bunch of other companies that are really good at mass marketing.
Yes, B2C, business to consumer. They're spending their hundreds of millions of dollars a year
Yeah.
on TV ads.
That's right.
You, the local loan officer, and more importantly, your independent mortgage bank that you work for, that's not and probably isn't going to be your business model, but it is a race to get to the consumer first. I'd even say, and go one step further, you're racing the realtors.
Yes.
There used to be a time back in our industry when you and I were hardcore originating. I could rely on a local realtor knowing that I was damn good at what I did,
Yep.
and that their client must talk to me. And the client didn't know where to go, so they would ask the realtor.
That's right.
Anymore, by the time the realtor gets to that person, they've already seen or talked to multiple lenders.
That's right.
At which point, even if the realtor does refer me because I am damn good at what I do, they're like, but I want to call these 2 or 3 other people too because they've been getting their message out to me first.
That's right.
Okay.
And first matters, by the way.
And first matters. So you're already getting ready to go down this path of explaining to us, we got to get there first. We got to get there earlier.
And what I like to say, and people get this, is if you're focused on the point of sale, you're going to lose. You need to be focused on the point of thought.
Ooh,
You need to
I
get
like
up
that.
the funnel at the point of thought. And
Okay.
so how do you do that?
I don't know.
Yeah, we're all figuring it out, right?
Yeah.
So our product at FinLocker, not that we're cracked the code on this, but our product's geared for up the funnel engagement with consumers. And what does that mean? So I'll talk about it in the context of a first-time home buyer.
Okay.
First-time home buyers don't just wake up on a Saturday and say, I'm going to go buy a house and I'm mortgage ready. They go through a process, and that process involves emotional preparation, financial preparation, and more emotional preparation to get there, right? It takes time. And so if you can figure out as a originator, who better be a good marketer, by the way, originations is like a part of the task, but you need to be a better marketer than an originator.
This is one of the few industries where you have to be the lead and most badass technician. Oh, and then, oh, by the way, take that hat off and put on another hat called self-promoter,
Yes.
local market expert.
Yep.
And you have to go out there and network like crazy in order to bring in the business. Now, those that are able to do both of those at a very high level, well, those are the ones that had not one but two commas on their W-2 last year.
Exactly.
You know, it's like, how many other careers can you roll out of bed with a high school diploma and with proper mentorship, proper leadership, and a few years experience, throw up a W-2 that has 7 figures
That's
on it?
right.
You know?
Yeah.
Okay.
And there's plenty of those guys running around our business, which is awesome.
Yeah. Lots. I mean,
But they're very good marketers.
Yes.
Every one of them.
Yep. So go on, talk more about that.
So how do you know marketing? And we're not a marketing company. There's great firms out there and agencies that can help with marketing, but at the end of the day, you need tools to market to, and you need calls to action to engage people, right? And so in that first-time homebuyer space, our product, again, geared really strongly for that segment. We offer lenders, originators of all sizes, frankly, a tool that they can white label, put their logo on. It could be in your tech stack. That's another great term we'd like to throw around. It's fun to say.
Tech stack, SaaS, circle back, right? Yeah. Those are all
cool guy words. So in our app, you can truly give consumers that you're engaging with months before they're thinking about buying a home with tools that are ultimately going to help them prepare. So we give them tools to access their credit, monitor their credit, but not only do that, but actually simulate changes to their credit score, right? So, boy, what would it look like if I paid down this credit card by $2,000 or I paid off this auto loan? What would that do to my score? Credit score is important. We know that. But the underlying credit accounts are equally important. So we give you a compass as well in there that can say, okay, my goal is to get to a 660 by next June. And then our app would tell you, these are the things you need to be working on as it relates to your credit to get to a 660, right? So a couple of simulator type tools that are very engaging, again, up the funnel.
Is this free to the consumer?
So our model is B2B2C.
Yeah.
So it's free to the consumer, and it's basically sponsored by a financial institution, a mortgage company, a mortgage broker, a loan officer, et cetera.
Yeah, I mean, I love this because this is leaning into everything I've loved about this industry, which is, look, we're advisors.
Yes.
I'm not a loan monkey. I don't want to just pull your credit, input some numbers, and give you a rate quote.
Yeah.
Right? Like, no. I want to advise you, and I want to start the minute you think you want to buy a house.
Exactly.
But I can't do that in today's day and age and compete against the Rockets and the Betters and the Loan Depots unless I have some of the technology or access to the technology. Right? And that's what you were sharing with me off camera, Brian. It's like, hey, look, the way of doing things, it'll still work, but to a certain degree, right? Like getting out and getting belly to belly and face to face and being able to hold someone's hand through the loan process and be at their closing is going to matter.
Yeah.
But it's only going to matter, and you're only going to be able to get there if you have the same tools that these B2C players have.
And at scale.
And at scale and economical, and it has to be free to the consumer. So in order for it to be free to the consumer, I, as a loan officer, part of my marketing budget may need to be, hey, I'm gonna spend $100 a month. I'm gonna spend $200 a month.
Right.
I'm gonna ask my company to take on some kind of an enterprise relationship so that we can have these tools at our disposal. And I'm gonna start my marketing efforts not when they decide I'm out looking at homes, writing a contract. No. I want to get to you 9 months or 6 months before, where I want to teach you the power of home ownership. I want to teach you that homeowners are 70 times more wealthy than non-homeowners. And if you think you want to buy a house, but you're afraid you're not ready, let's have a conversation today. And you're probably not ready, but that's okay because I have a tool.
There you go.
I have a tool that's going to help you get ready, and it's going to help you track it, right? I mean, it's I love that concept.
Here's the best way for an originator to think about this. And like 2 months ago, I was doing a presentation, and one of the guys that was on the other end on a Zoom, by the way, he's like, time out. So basically, you're Credit Karma, Mint, Zillow, Rocket Homes, but under my logo. I'm like, I guess we are.
That's FinLocker.
That's us.
That's FinLocker.
Yeah.
Now, are you guys playing around at all with like the ability for an originator to utilize D1C to where, like, not only can I take that customer when they think they want to become a homeowner, but now they've decided.
Yes.
They have their credit score up to 680. They saved their $15,000.
Yep.
Right? They got the raise they needed. They paid down the debt they needed. And when I go to ask them for things like W-2s and pay stubs and tax returns and bank statements, can I keep everything still in-house and utilize some kind of a service to where I'm like, nah, I don't need it because you're already in the FinLocker system.
Right.
I can API with Encompass and I can run you through D1C, hope that I can get some income and some asset waivers. Does that all that correlate?
All of that, yeah, to a degree.
Okay.
I'll tie it together now. So if you think, again, going back to our first-time homebuyer persona, which is part of our app identifies who you are when you're setting up your profile. So we ask a series of questions as you're creating the app, download the app, and you start answering questions, and we quickly isolate on a persona. Based on that persona, and then goals and objectives that you set in the app on that persona. So if I've been identified as a first-time home buyer and I said, I want to buy next spring, next April 2022, I want to buy a home. So now we have a timeline, we have a horizon of time to work with, and the app actually creates a very custom journey for that user that's really dynamic and custom to that person.
Okay.
Based on that persona of a first-time home buyer, the goal of being mortgage ready, buying a home in April. And along that journey, we're going to advise them to do things. If early on we know that credit is kind of holding them back, the focus from the app is going to be on improving credit. So there's going to be tips, tools, and insights given to the consumer to help them improve credit. If saving for a down payment is an inhibitor, then that's what we're going to focus on through the goals widget in the app. But as you progress and get closer to a place where you're likely going to be mortgage ready, we'll start advising the consumer to start storing documents in the locker.
Okay.
Tax returns, pay stubs, and actually very soon, probably in Q4, in lieu of having to store pay stubs, the consumer can actually just link their payroll right in the app.
So like whether it's Pro or whether it's ADP,
exactly.
then I can go into the app, I can give them my username and my password so that those two can interface and the documents can be stored on my behalf.
Yeah, and it won't even be documents, it's going to be the data.
The data, okay.
And so if you think about...
Like the work number type data or...
Similar but different.
Okay, yeah.
It's coming right from the payroll provider.
Okay.
And so every other Friday...
Oh, so to be more accurate than the work number.
I didn't
perfect.
Say that.
I said that. I will say that. Yeah, the people at work number can hate on me all they want, but yes, there's too often the time that their data is not accurate when I get a W-2 and a pay stub, and it ends up being a massive issue in underwriting because underwriting wants to use work number, but the work number is not accurate information. So anyhow, won't go down that rabbit hole. I know you have a call right after this. I need to be cognizant of your time, and I still have a plethora of questions that I want to get to.
So if you just think about data as empowerment for the consumer, in this app, they're going to be walking around essentially with all of their financial data, the asset side of their data, and now their income and employment. And so at that point of mortgage readiness, now it's time to engage. We also have this readiness assessment that perpetually gives the consumer feedback on where they stand with respect to being ready. We have an integration with an automated underwriting engine as well. That's pretty cool. We can go into detail on that later. But once I've achieved readiness and I want to start my application, if I'm already connected to Dustin, he's the one who gave me the locker. That's who's my contact in the locker. We just take them through a process to digitally or seamlessly share the data from the locker. So we convert it into a Fannie 3.4, which is for those that are not in the mortgage business.
It's
that's
a file.
Standard data set. That data set, that Fannie 3.4, can be ingested into the loan officer's point of sale or LOS and pre-fills the mortgage applications. About 90% of the data needed to pre-fill the mortgage app.
Oh, wow. So you can even start a file. Like here at Waterstone Mortgage, the company that I'm affiliated with, we utilize Encompass, right?
Yeah.
My friends may use Calyx or another one of the loan origination softwares.
Yeah.
But I could start a file in FinLocker, click a button, and have that just import into Encompass.
That's right. So we're not a point of sale, we're not an LOS, but we provide data that those systems can use to pick up the process, right?
Okay.
So your customer from the locker would share across the data, all that digital data. It's all real time. And then you ingest it into your LOS, and then you take the process from there. And then any documents that were stored along the way can be part of that payload as well. So if the consumer, that first-time home buyers, truly followed the direction of the app, that first mortgage application experience when they're engaging with you should be, okay, I just need these last 10 bits of data to complete the application, and then you can go to underwriting.
Wow.
And now maybe you get a step or two based on, what the underwriter had for breakfast that day.
You start thinking about the type of market we're in today with it being an extreme seller's market, and companies have their platinum pre-approval.
Yep.
But sometimes that platinum pre-approval is cumbersome. And a platinum pre-approval, for anyone who doesn't know that particular lingo, it's basically where you truly take someone's file without property and put it through underwriting.
That's right.
and an underwriter has signed off on your pre-approval. Now, I will talk to you till I'm blue in the face that as a loan officer, you better be so freaking good at your job that every one of your pre-approvals should be quote unquote platinum.
That's right.
Because you know Fannie, Freddie, FHA, VA, LPA, DU, you know your stuff inside and out better than an underwriter.
That's right.
But sometimes sellers and sellers agents, they would love to see an actual underwriter's name signed off on that pre-approval. And if you're utilizing technology, it'll allow you to do that 3 times faster than if you weren't able.
Right.
So in order to be cognizant of our time frame here, because you and I could probably sit here just as mortgage geeks and talk for hours at a time. True or false? The mortgage industry is one of the slowest adapters to technology as compared to all other business entities.
True.
Right? And I think anyone who's tuned in this far should know that.
Yeah.
But true or false? Technology is going to turn our world upside down in just the next 3 years.
Oh yeah, clearly. I mean, you just again if you look in the mortgage space at who's spending money to get to the consumer, and then you look at their underlying business model, it's driven on technology. So you have to, if you're thinking beyond 2 years, and you're going to be doing this in 2025 and beyond, you have to embrace technology. You have to have, we'll say tech stack again, but you have to have a tech stack that is focused on the consumer experience. That's more important than your experience, frankly. You need to focus on the consumer experience because that's who you're competing against.
Every conference you and I have been to for the past 3 years, there's 2 underlying themes. One is diversity and inclusion, which is required and needed, and we must do a better job.
That's right.
But the second is consumer experience, period, end of story. Let me ask you this, though, Mr. Technology Guy. Right, Brian, now you've been demoted or promoted to technology. You're no longer loan officer. You're no longer executive of the TPO division. Right. Do you ever see the role of the loan officer disappearing?
No, absolutely not.
Why not?
I see a segment of consumers that will 100% go to tech, and if they can do it all the way through without talking to anybody, they will. And there's a lot of young people that everything they do, that's how they do it. But there's at least 50% of the buyers, especially first-time home buyers, that need the advisor. They just need it. And especially today with the gig economy and all the side hustles, it's not just cookie cutter salaried, get a W-2, if you're a 780 FICO and you're a salaried employee and you've been on the job for more than 2 years, that's cookie cutter.
Yeah.
But that's not the business.
Well, it's funny. People always ask me that. And my answer, I wanted to hear your answer first. My answer is always no. It'll change. Technology is going to change how we do business. Yeah. It'll make some parts better. Other parts is going to force us to do twice the work in order to make the same money we used to make. But hopefully it made the work half as hard. So we're still working the same amount of hours. Yes. We're just having to do more to make the same money.
What I love is and I see these loan officers out there that understand that that's coming. And they're not fighting it. They're not bitching about it. They're not crying about it. They're basically figuring out that they know that they're going to win.
Yes.
They're going to scale.
But if you can figure out a way to adapt technology, like we're sitting out here, we're pimping out FinLocker, right? There's Finicity, there's Blend, there's CRMs that you should be looking into. Like there's a ton of different technology that you need to be utilizing, and some of it in unison.
Yes.
Right?
You have to be thoughtful.
Like you and I were offline talking about like what FinLocker does. I'm like, well, do you compete against Sales Boomerang? You're like, we do a component of what Sales Boomerang does, but I wouldn't say we directly compete against them.
They're really good at what they do.
Yeah. What about Finicity? We have a component of what Finicity does, but we don't necessarily, right? And Sales Boomerang and Finicity and FinLocker are all technologies that people need to be embracing. HomeBot, you're like, we compete a little bit in HomeBot space, but again, we don't 100% do. And I'm dropping these names of these companies because if you are in the mortgage space, especially on the sales side, whether you run a branch, run a region, or you're a rookie loan officer just getting started, you need to be looking at this. But I always answer the question of, is technology going to replace a loan officer?
No.
I'm like, look, as long as people still get excited, they get sad, they get fearful, they have anxiety, we as loan officers will always be needed.
That's right.
Because technology can't hold someone's hand. They can't show empathy. They can't speak with sympathy.
That's right.
Or talk about real case examples that correlate with what they're experiencing to make them feel better about their situation.
100% right.
And then like just yesterday, so full disclosure, I have not originated a loan start to finish in 2 going on 3 years. I still have a production team. I still manage and coach loan officers. I have branches and regions, but I don't necessarily do the loan start to finish. But I do like to get on the phone with consumers, like with whether they're refinancing or whether they're buying. And I want to do this 2 to 3 times a month because it keeps my skills sharp. And quite honestly, I love it.
Yeah.
Just yesterday, I had a good buddy of mine who I do investments with. You and I were talking about angel investing and VC investing. Charlie is one of the guys who brings us a lot of our opportunities, a lot of our deals. And then he'll set them up and, take his fee for doing so, et cetera. Anyhow, Charlie introduces me to a family member. I talk to the family member. And at this point, I'm like, hey, I'm gonna help this lady out. Like whether Waterstone does her mortgage or not, I really don't care.
Right.
I would love to do her mortgage, but that's not the purpose of my call. Purpose of my call is Charlie's my boy. I want to take care of his family member.
Yep.
Just by talking to her, she was trying to do everything online. Didn't want to talk to a sales guy or a sales girl.
Right.
Well, realized that she was refinancing because she was being forced to by a divorce. Well, technology wouldn't necessarily know to ask her that question. Technology, you're a cash out refinance. Well, Fannie Mae and Freddie Mac have these things called loan level pricing adjustments or pricing hits when you do a cash out refi. Everyone knows that. You can look it up, Google it. But if it's a cash out refi that's coming from a divorce and I have a divorce decree that states it, I don't have to pay that loan level pricing adjustment. So this lady would have taken a higher or been obtained. I hate the word taken. She would have obtained a higher interest rate if she just told a computer she had to do a cash out refinance.
And that could be 20 grand over the life of the loan.
Yes.
Or more.
Yes. It's at least $80 a month.
Yeah.
And this is like a $400,000 loan size.
Yeah.
But by picking up the phone and talking to a mortgage professional, and that mortgage professional just started asking the question behind the question. And I realized, you don't need to do debt consolidation. You're not trying to do home improvements. You're not trying to go pull money out to buy an investment property.
Right.
Like you're doing this because you have a court order that's forcing you to do so because you're dividing assets in half.
Yeah.
I can actually offer you 2.875, not 3 1/4.
That's
right.
massive.
And that example right there is how I would answer why technology will never replace a loan officer, but loan officers who don't embrace technology,
they'll be doing something else.
you'll be doing something else.
That's just the fact.
Yeah. Go ahead and hang up your cleats. You're done.
You're done.
You're done. Hopefully you made a shit ton of money last year and you saved half of it.
Right on.
And that's going to get you through the next 10, 20, or 30 years because if you don't embrace technology, you won't have a career in this industry.
That's right.
Yeah. Any parting shots?
No, this has been awesome. This is so much fun actually getting face to face, and actually seeing people again. It's
yes, and
like
we're
real.
We are here at the Lenders One conference.
It's been cool.
Like shout out to Lenders One. If you are a executive, if you run a mortgage company, right, especially a smaller mortgage company, you should be a member of Lenders One.
There's so much value.
You should look into what they bring to the table, attend one of their events. Now, this event isn't necessary for loan officers, right? If you're a closer, a processor, an underwriter, a loan officer, this probably isn't for you. But if you're going to leave that field to go open up your own processing company, right, whether it's third party or your own mortgage company, then you should look into something like Lenders One. If I want to look into FinLocker, which, by the way, I'm pretty confident Waterstone's looking into FinLocker. And if they're not, I'm going to make sure that I talk to Jeff McGinnis and I talk to Lisa Finsky and I talk to Rich Tucker, and we're going to make sure we get some phone calls your way because I'm intrigued. But if someone was interested in figuring out, I know from talking to you, Brian, that I can be an individual loan officer and I can go into partnership with FinLocker. I could run my own mortgage company. At all sizes, and I can go into partnership with FinLocker. But what's the best way for someone to check out FinLocker and what you all have to offer?
Go to finlocker.com, finlocker.com, and then on our webpage you can request a demo. We've got a demo in there. You can check it out on your own, and then or just request a meeting. My link's on there. You can connect with me, and love having conversations. Love to learn about people's business models and then figuring out if we can help them. And by the way, we're not for everybody.
Yes.
You need to be a forward-thinking company and a forward-thinking originator to really be successful with our product.
Cool. And just like I'm Dustin Owen on LinkedIn, he's Brian Vieaux on LinkedIn. Remember, it has every vowel in the last name but the O and the Y.
Oy.
Which, by the way, Y isn't necessarily always a vowel.
Sometimes.
So, yes, sometimes it is, but that's why you all left it out. We got to figure out how to get the O in there, then we get them all figured out. But no, he's Brian Vieaux. I'm Dustin Owen. You have tuned into the Loan Officer Podcast. If this is your first time checking us out, again, whether you're listening to us on Spotify or Apple, do us a favor. Please please give us a 5-star review. Please subscribe and please forward if you like what we're doing. You might not like to listen to us. You prefer to watch us. If you like to watch us, we are on YouTube at the Loan Officer Podcast. That is the channel, the Loan Officer Podcast. Check us out, subscribe. It's a great place to leave comments as well. And eventually, once John Coleman gets his shit together, we are going to have a website.
Nice.
tloponline.com or theloanofficerpodcast.com. He's Brian. I'm Dustin. That's all the time we have for you today. We will catch you on the next episode. Peace.